Welcome to The Explainer. So, today we're diving into a strategy that has quietly become the absolute gold standard for institutional money in the digital asset space. We're talking about crypto arbitrage. Look, if flashing red and green charts and constantly guessing the market just feel, well, overwhelming, the material we're looking at today offers a totally different approach. It uses an automated system called flash arbitrage. We're going to break down exactly how this system claims to ditch the guesswork and tap into highly predictable, objective margins. And the best part? It's designed for everyday users, not just Wall Street insiders. Okay, let's dive into this. The core philosophy here is actually incredibly simple. The smart money doesn't play the guessing game. Seriously, you do not need a degree in finance or, 10,000 hours staring at charts to understand crypto arbitrage. In fact, we can absolutely master the core concept in the next 5 minutes. The whole goal of this platform is to completely remove that emotional roller coaster we all hate about traditional investing and replace it with pure mathematical execution. So just forget everything you might have heard about how hopelessly complicated the digital asset market is. We're going to unpack this from the ground up. To start, let's just picture a really simple scenario. Imagine a massive, highly demanded pop star, the kind whose tours literally shut down entire cities and drain bank accounts, is doing a huge stadium run. Okay, so in City A, a ticket is selling for $50, but in City B, maybe just a few hours down the road, where the fans are even more rabid, people are happily paying $75 for that exact same ticket. Now, if you buy that ticket in City A for $50 and instantly sell it to a buyer in City B for $75, you've just captured $25 in profit. Boom! You didn't write the songs, you didn't promote the tour, you literally just captured a temporary price gap between two different locations. And that right there is the theory of arbitrage in its absolute purest form. According to our sources, this exact same dynamic happens with digital assets every single second. A coin might trade slightly lower on one exchange, like Kraken, and slightly higher on Coinbase. Arbitrage is simply stepping right into that gap. Now, traditionally, this whole space has been completely dominated by what we can call the old way. You know the drill: buying, holding, and just suffering through major chart fatigue while trying to manually guess the daily ups and downs. And when the market takes a sudden dip, it usually leads to plummeting portfolios and just a whole lot of emotional stress, mainly because every single trade is basically just a shot in the dark. On the flip side, what's described here as the smart way relies entirely on automated arbitrage to lock in objective profit. By exploiting those structural price gaps we literally just talked about, this strategy aims to stay totally calm, calculated, and completely neutral to which direction the overall market is actually moving. So you might be sitting there wondering, wait, if it's as simple as flipping a concert ticket, why isn't literally everyone doing this manually on their phones? Well, that brings us to the villain of our story: human speed limits. Think about this. The average human blink takes about 300 milliseconds. But these highly profitable price differences, they decay back down to zero long before you could even finish that blink, let alone open up an exchange app on your phone to place a trade. As the broader market corrects itself, poof, the opportunity just vanishes. Basically, your physical reaction time is the absolute ceiling to what manual trading can achieve. You simply cannot click fast enough to beat the global market. So to bypass those physical human limitations completely, the source material points us to a machine-based approach, like flash arbitrage. This platform's engine is essentially designed to stay continuously connected to over 50 global crypto exchanges, all at the exact same time. I mean, just imagine trying to read 50 live order books at once without blinking, somehow processing and comparing every single number. It's impossible for us, but that is exactly what this engine claims to do in the background. It's built to completely eliminate the need for you to sit there glued to your screen, actively hunting for those hidden price mismatches across dozens of platforms. And this brilliantly illustrates the sheer power of modern automation: 12 milliseconds. That is the stated latency speed of the flash arbitrage engine. Let that sink in for a second. According to the platform's architecture, once it spots a price gap across those 50-plus exchanges, it doesn't just send you a little push notification. No, it calculates the exchange fees, checks for potential slippage, and completely executes the profitable loop in just 12 milliseconds. The ultimate goal here is to defeat price decay entirely. It locks onto pure mathematical mismatches and captures that structural gap instantly, right before the opportunity disappears. Now, what happens when the market just goes completely crazy? You know exactly what I mean. Those days when prices are completely tanking, your timeline is just pure noise, and traditional traders are totally panicking. Well, flash arbitrage is built on the fascinating premise that volatility is actually your biggest advantage. When there's market chaos, the price discrepancies between all those different exchanges actually get so much wider and far more frequent. So a massive market dip, that's actually an opportunity for significantly larger profit gaps. Plus, the platform utilizes what's called a concurrent execution architecture. Basically, this means you can have multiple automated trades running simultaneously. It completely bypasses all that emotional market noise and just focuses on continuously executing the math while you go live your life. When we take a look at a snapshot of a live trade environment, we can actually see exactly how the AI routes these opportunities in real time. Depending on your chosen risk to ROI ratio, you might see a Bitcoin or Solana pair displaying, say, a 0.34% profit margin. And the engine is super transparent. It shows you the precise route it intends to take. For example, buying on Binance and instantly routing that exact sell over to Coinbase to capture the spread. Once you find a profitable route that you're comfortable with, you just allocate your funds, confirm the trade, and then the AI completely takes over. It rapidly switches between the exchanges to actualize those calculated returns. Now, you might be thinking this sounds incredibly complex to set up, but getting this institutional-grade architecture up and running is actually described as a really simple plug-and-play process. It literally comes down to 3 easy steps. Step 1, you create an account and complete a quick verification. Step 2, you fund your secure wallet, which you can do either through an automatic deposit connected to an external wallet or just a standard manual deposit. And step 3, you start trading. You can either enable the fully automated bot or you can manually join those specific trade routes we were just looking at. Essentially, you allocate the funds and you let the machine handle all that lightning-fast math. Of course, a massive question anytime we talk about automation is trust, right? If a system is going to be doing all of the heavy lifting, security is absolutely paramount. The platform outlines several really solid bank-grade security measures to put your mind at ease. According to their documentation, the vast majority of user funds are kept safely in offline cold storage, which effectively isolates them from online threats. They also require strict two-factor authentication for any sensitive operations, and this is all while utilizing enterprise-level encryption and 24/7 automated threat detection. Basically, they are constantly monitoring the ecosystem around the clock to keep things locked down. And beyond the automated trading algorithms themselves, the system also includes a multi-level referral architecture, which is a pretty cool bonus. Users get a unique code they can share, and that allows them to actually earn commissions on the deposits made by their network. It's essentially designed as a secondary stream of passive income. So as your network expands, you're accumulating rewards right alongside your daily automated arbitrage loops. So how does all of this actually build into reported performance? Well, looking at the data to date, Flash Arbitrage notes over $2.8 million in total profit paid out. That is a serious number. This figure represents the reported revenue generated purely from exploiting those structural price gaps we discussed, and it's been delivered across a really fast-growing user base of nearly 1,700 people. With an inherently high volume of active trades executing at any given millisecond, this data really highlights an ecosystem that is built entirely around leveraging automation to beat market chaos. Which brings us to our final big question for today. Are you really still trying to guess the noisy market, risking your hard-earned capital on a random hunch or some stressful emotional chart pattern? Or are you finally ready to stop guessing, flip the switch, and just execute? The source material makes a remarkably compelling case that the smart money has already moved on to automation, completely shattering the ceiling of human limitations. Really, the only hurdle left is having the discipline to step back and let an objective engine run. Thank you so much for joining me for this explainer today. I really hope it totally changed how you view digital asset markets and the brilliant automated strategies quietly operating within them.